Welcome to the Compliance Network podcast, your compliance community. Since 2014, we've been helping financial services companies understand and follow the rules that govern the industry. Whether you're nearby or across the globe, we're here for you. Let's jump into the latest trends, tips, and updates in the ever-evolving world of regulatory compliance.
Hello, everyone, and welcome to the Compliance Network podcast. Today, we're doing something a little bit different. We're bringing in some of the team members. We're going to get in there and talk a little bit about a couple of topics. We're going to get into cybersecurity and technology governance, AML and financial crimes compliance. We're going to talk a little bit about vendor due diligence and storage of work for future use. But before we do that, I'd like to welcome to the studio our team members today. We got Shivan Swarath and Shane Jordan. Guys, welcome to the studio.
Thanks a lot for having us.
Yes. So excited to get into this. But before we do, I think it would probably make sense to get a little background on you guys before we dig into these topics. So let's start with you, Shivan. Tell us a little bit about your background and your role at Compliance Network.
Oh, yeah. My background is pretty much has been in AML, fraud, trade desk reviews, money movement transactions, interacted a lot with clients as well as team members in different organizations. So that's I'm bringing to the table of Compliance Network my knowledge in AML and fraud, elder fraud exploitation, transaction monitoring, and we have a great team. Thank you.
Yeah, of course. How long have you been with Compliance Network?
I'm working on my second year here right now. I started in November of 2023.
Very good. All right, and Shane, your turn. Go for it, brother.
Sure. I've been in the financial service industry for about 27 years, handled many different roles and titles, successfully passed the Series 3, the 7, the 9, the 10, 24, 30, 63, 65, and the ACAMS, the Money Laundering Specialist exam as well. For the past 15 years or so, I've been specifically working in the realm of compliance, working with some firms like Morgan Stanley, Wells Fargo Advisors, Legg Mason, and TradeStation Securities. As far as the Compliance Network, I've been with them for roughly 9 years or so.
Right on. Getting a little bit of, it looks like I lost my video, so we're going to keep it going here while I fix this. So never mind me here. I think we're going to pop up shortly. So Shivan, let's start over there with cybersecurity and technology governance. What are some of the most common cybersecurity threats facing financial firms in today's market?
Some of the cybersecurity threats that are facing the financial market will include, I would say, ransomware, data breaches, also phishing attempts would be the most popular ones. Also, I would have to say, was data breaches and I forgot the last one of the threats in general in regards to the data breaches. Sorry, a little bit nervous there.
You're good. Hold on, I'm gonna pause this real quick.
Mm-hmm.
All right, so Shivan, let's start with you and let's get into cybersecurity and technology governance. What are some of the most common cybersecurity threats that are facing financial firms in today's market?
Some of the financial threats that are faced, that these firms are being faced with are phishing attempts, ransomware, data breaches, and credential stuffing would be a couple of them that I can name off the top of my head. And the most popular ones.
So I can imagine that as technology continues to advance, especially with developments in artificial intelligence, this has changed the landscape tremendously. Can you talk a little bit specifically about AI and what that's doing, in the industry now?
AI has changed it tremendously, the industry on a whole. From a positive perspective, it has firms have pretty much taken advantage and create automated systems using AI to detect and report automated reporting for different kind of threats that they have in the industry to assist clients, to assist the firms in preventing any kind of fraudulent activity on their account. From a negative perspective, the AIs, the individuals who are doing harm to clients in the financial industry are using it to pretty much send more attacks than before, because now they're able to program it and they're able to do voiceovers or copy executives and team members' voices, and probably use that as a form of attempting to get information from the firms. And those are some of the ways that that's affected.
Yeah, and some firms put it in place. I mean, obviously every firm is different, from firm to firm, but they'll have like a callback policy. So if someone gets an email that looks suspicious, or you need, they're requesting money or something looks odd, they'll have a callback policy, meaning that they'll actually call the client directly in order to confirm, like, hey, did you submit this information for, a money release or something of that nature? So firms recognize that, and we're seeing that more and more where firms are putting things like that in place.
Yeah, I mean, nowadays, when it comes to the AI to the general public, I mean, you could see the amount of information that's coming out now. They're putting out videos that are completely fake, and you can't tell the difference. So I can only imagine how this is affecting your industry when you're dealing with, obviously, any industry where there's the capacity for making money. There's going to be nefarious actors using that to their advantage. What about FINRA? What's their stance on firms using generative AI in their operations?
FINRA's stance on it is pretty much I think they're concerned it's something new to them. They're trying to understand how it works. They're more concerned that we're using the proper disclosures to alert clients, and also educating clients of the positive and negative parts of this. I think they want to make sure that firms, even though they may be using AIs, that they're still doing some sort of human intervention by reviewing the KYC for clients, and customer due diligence is somewhere programmed in there to review that, the account and documentation, when they're using AI to assist clients with trades or anything of that sort.
How can firms protect themselves against ransomware, phishing attacks? I know, Shane, you were talking a little bit about that. Like, what are some practical things that firms can do, to prevent some of these things from happening?
At firms that I've been involved in this project before, they were using education as the key as a key component into combating these kind of attempts. They would send emails out in regards to educating the employees and showing them what different things to look for. For example, some of these phishing attempts would have spelling errors or logo errors or not proper grammar. So they would do a lot of education in regards to educating the team on how to spot these and report these immediately, or that would be one of the major aspects of training for these different cyber attacks.
But FINRA has also put in place too, just to piggyback on what Shivan's saying, which makes total sense. FINRA has also put in place for the past couple of years. They're supplying their own continuing education, and obviously these elements are part of that continuing education that they're sending out to firms, as far as recognition of cybersecurity situations and things of that nature, and it falls under the umbrella of communication with the public.
How should a firm handle a cybersecurity incident and then the regulatory reporting requirements? Like, let's say there is a data breach or something like that. What does that process look like? What are the requirements?
For that, they would pretty much, if it's data breaches and so forth, they would pretty much, the firm is responsible for reporting it immediately to probably the FBI or the FINRA body that's the regulatory body, to make sure that they're informing clients as well. Would be a major step in that, in that direction, informing the client what took place and what we're willing to offer to assist them. I was in a situation with one of the firms prior where they did have a data breach, and they did have, I think, was a number of different clients. They immediately sent out emails and they offered protection to review their credit history and for about a year or 2 years to make sure that nothing is. They didn't use the attackers didn't use the information to open other accounts at other firms or credit cards and so forth. So those are some of the that's the process that we suggest in regards to if that happens to a firm or anyone in that situation.
Got it. But nowadays, everything seems to be stored in the cloud, right? What are some of the risks associated with cloud storage and third-party technology providers?
Some of the risks would include definitely hackers from getting the information. I mean, if they create a program using artificial intelligence to get that information from the servers, that's very, very crucial in regards to the business that we're in. We strongly suggest that update passwords and make sure your IT department is doing regular checks to make sure that they're aware, they're ahead, or they're making sure there are no breaches to affect any of the clients or any of the financial firms' information. That's strongly what's suggested in that situation.
Anything you'd like to add to that, Shane?
Well, normally, and it kind of feeds into the conversation we might have a little bit later about, like you mentioned, the topics as far as third-party vendors. Normally, if someone is outsourcing their IT, and a lot of times these days, if you're a smaller firm and not one of these big guys, you're outsourcing your IT. So part of the IT program is to do a penetration test on the firm and to look at data like that. So it kind of gets into the vendor section that we're going to get into later. But yeah, normally your IT provider or any kind of resource that you're using should be, or hopefully is, doing some kind of penetration test at minimum on a yearly basis.
You mentioned education is paramount here. Obviously, that's incredibly important for a firm's employees to be trained properly. What are some tips or suggestions that you can use? Because it seems like there's a fine line here between, you want to be super cautious, obviously, as an employee. You get something that comes in that doesn't look right, but you still got to get work done, right? So you can't get bogged down. You can't constantly be asking people for permission to do things. What are some things that firms can implement for their employees to get more comfortable with this process and really be the first line of defense against these threats from coming in the first place?
From my experience, companies have used the experience that they have had and ways that attackers have attacked the firm. Also, there are different vendors out there that does provide training as to what is important and what to look for when looking at these things and what would help the firm depending on different attacks that are out there, at this current time. So I would say, researching vendors and also, talking to your IT team to see what they see that are trending out there and what could help your team prevent this to expose clients' information or firms' information to the public or to attackers.
Makes sense. Okay. So moving on to the next topic, anti-money laundering and financial crimes compliance. What are some of the latest trends that are developing in financial crimes that you'd like to raise awareness on? What should firms be aware of in that space?
In the financial crimes part of it, firms should really be aware of transactions that are happening in clients' account, where the funds are coming from, who's opening the account is very important, who's involved, who are the UBOs that are going to be involved in the account, what kind of activity they're going to be doing, what do they predict would the activity be. They may not always stay on trend with what they write on the documentation for the firm. So it's important to always get an update. They say the rule is pretty much 3 years to update KYC, but you may have to do it more regularly depending on the activity that's happening in the account. So, we do have with cryptocurrency and all these different assets that are being traded, there's a lot of changes happening. I mean, people inherit money, people win the lottery. They different things. They may change industries, change fields, their income may increase. So it's very important to keep an eye on what has increased. If their KYC or compliance due diligence says they're funding with 100,000, all of a sudden 500,000 appear in their account, or the activity changes. They would normally withdraw 2,000, now they're withdrawing 5,000. Another really key important aspect here is elderly fraud exploitation. That's really important right now. It's really sad to see. I've had family members in that situation that they're not familiar with technology, so they're being taken advantage of in regards to getting an email or receiving a phone call or Skype. I remember I was trying to help my mom the other day, and she got a phone call on, I think it was one of those programs. She answered it, and it was an IT team pretending they were Microsoft to assist her, and she was going along with it.
Yep.
So that's very, very important in regards to elder fraud exploitation and different aspects of what's trending right now in the AML sector.
Yeah, man, that's a big one. That's actually something that happened, in my not my life personally, but a good friend of mine, his father was a victim of that, and somebody got in there, and a younger woman came in and basically hooked him in and got a whole bunch of his assets, froze his computer, and took him for, I think it was tens of thousands of dollars. So yes.
Romance fraud is also really it's been trending for the last 10 years. I mean, what I've seen, and I've done a paper for one of my classes, and when I was doing my master's program on individuals, especially investors who spent a lot of time with education and trying to get themselves financially prepared for their future, and I guess the loneliness attacked them at a certain age, and then they start going online to start dating, and all of a sudden they're caught up with their investments and their day-to-day jobs, and they're sending money to different countries looking to fill that vulnerable part of them, and they've been taken advantage of. It's very tough times.
Yeah. Now, obviously, compliance with all these issues can be very, very difficult for businesses. There's a lot going on. It's very complicated. How do firms ensure compliance with anti-money laundering regulations?
They pretty much put a very stringent review process in place. Is what FINRA suggests that we do. Pretty much be able to either use AI to create automated systems to track different alerts with clients' activity, making sure that we're monitoring, at least ask the question. There may not be nothing associated, but you always have to ask questions as much as you can. Making sure that you report, do your investigation. They're making sure that the policies that we have in place, the WSPs are in line for what the team is doing, and making sure that you're reporting or at least documenting and following up. Continuous monitoring is key in regards to what they look for. At least if you have a question, ask it, give a chance for a response. If you don't respond, or if the individual or the investor does not respond, you still have to proceed with your process. At least it's better to report than not to report.
That's better to err on the side of caution, for
and
sure.
Just real quick, sorry, Jeremy, not to.
Oh no, go ahead, man.
Just to let you know, too, in the regulatory world where we are with FINRA and the SEC and things of that nature. So a firm has to have written supervisory procedures, and they also have to have AML procedures independent of that. So what happens is every firm who's regulated by FINRA or the SEC, they need to have an independent auditor come in once a year, and part of their reviews are broken out that way. So it's a supervisory review, and then you also have an AML review independent of that. So they marriage that together depending on whatever vendor you use, but that needs to be done as far as showing, okay, here's your policies and procedures for supervisory, but independent of that, how are you handling AML?
Yeah. Even more, all the more reason why firms need to have a team such as yours in place. There's so many moving parts, and the stuff can be so complicated. What are the most common red flags for money laundering? What are some things that businesses should look for, like the top things that should be on their radar when it comes to money laundering?
Activity, money movement, trading activity in the account, depending on, for example, a client depositing $100,000 and buying a treasury bill, holding on to it for a day and then selling it and withdrawing the funds to another institution. Some in situations, clients may send funds into the account. There may be no activity and send funds out, maybe a week, 3 months to another institution, depending on if they're trading, low volume stocks or any of that activity could be questionable. Based on my experience, we've had funds coming in for, let's say the clients fill out their documentation and indicate they'll be funding their account from an institution, Bank of America, for example, and they do a $5,000 deposit from there and a $100,000 deposit from Citibank. We would need to ask the question because the documentation did not mention anything of that sort. So these little things may seem, unimportant, but they may be important in the long run. So like I said, I always say ask the question, make sure we have the proper documentation on hand. But yeah, definitely deposits, trading activity, where they're transferring money to, where they're transferring money from, where they get the money from, what line of business they're in. All these things would play important role, a critical role in detecting what's going on in the account and what to pay attention to.
You mentioned cryptocurrency earlier. I want to get back to that because that's another hot topic along with AI. What impact has cryptocurrency had on AML compliance in recent years?
It has made things a little bit tougher. I think firms are still trying to get different tools to assist them in regards to tracking the activity. I mean, now they have tumblers and mixers. And I remember when I was working at the prior firm that we had software, I think it was blockchain analytics. I think was a software they created where you could actually go log in and track the coin as to where it's been throughout its journey, which was very interesting. It used to be like a huge web, and you would just take each leg of the web and move it aside to see where it's coming from, and it would show you that these currency went into a tumbler or they went into a mixer, so that way you can't detect where it's coming from or who actually owns it. So it's put some challenges in place. I mean, firms now are implementing different AI tools to break down the location of where the direction of where those funds came from, exactly where it was deposited before. They also have the travel rule where you have to ask the information as to who owns the coin. I think when there was activity at that time, we would ask the client as to the information of the client, and possibly they could able to track the coin in that way as to where these coins are going. So yes, it's been a learning process with cryptocurrency. I think it's going to still be a learning process because it's global. It's not fully traceable, but they're trying, and I think that's something that we're going to keep on learning as we go.
Yeah, we're in uncharted waters with AI and crypto because these new technologies are very, very loosely regulated currently, right? There's not much regulation going on there, so it is like the Wild West out there, and it's going to be interesting to see how things develop as we move forward in this landscape. Was there anything else that you wanted to touch upon before we move on to vendor due diligence?
Pretty much just wanted to make sure that we make sure, as you mentioned, crypto before. I think it's for the regulators as well as firms, it's kind of uncharted territory, like you were stating before, that there's not much they can do in regards to tracking it, but they're trying their hardest to get their hands on it. And I think with AI, hopefully we're able to get more programs involved into tracking these transactions, whether it be cryptocurrency or whatever else the client is willing to or are trading in their account. So we keep on continuing. We're always growing. We're always learning. I mean, technology keeps us on our toes. So I think it's just important for us to stay upbeat with the trends. And
100%. All right, Shane, vendor due diligence. From your experience, what are some of the biggest risks that companies typically face when dealing with third-party vendors?
Well, the major risk would be that they don't know who they're getting into business with. So they don't do any due diligence. And that's the whole point of, even like Shivan was saying earlier about AML. You need to know who's behind, the curtain. So if you're hiring someone, what policies do they have in place? Are they being regulated? Are they being audited? And, what track record do they have, and what services can they provide to the firm or the entity that they're going to service, as far as their rules and regulations as well? Because sometimes you might have an IT provider that doesn't always deal with a financial services firm, but deals outside of that. It might be a bakery or somebody else, but so every vendor might have different hats, but for your particular business, and in our world, meaning financial services, we want to make sure they have the checks and balances in place in order for them to, be able to answer questions from us internally, and obviously from the regulators if they ask about their policies and procedures.
what are some of the best practices for conducting due diligence, right? When you're looking for third-party vendors, what are some steps or things that businesses can go through to ensure that they're working with reputable companies?
Well, one thing would be know who's, like I said, behind the curtain, who's truly in charge of that company, like what's the ownership, who's there, and also as far as have they worked in that field before, like in our field, financial services, have you worked in that field before? And at that point, the firm itself, before they onboard, let's use an example, like I said, IT, use an example of, you can run database checks, be it world checks or OFAC checks through worldwide databases to scrub for the entity's name and for the people who are going to be touching your firm, and obviously the ultimate owner behind that third-party vendor as well.
So I can imagine that it would make a lot of sense for a business, for something as important as IT, to make sure that the company you're considering hiring has worked in that space before, right? And that maybe you can speak to some of the other firms that they've worked with, and get some feedback from them to find out how that process has gone.
Yeah, I mean, using the network, like using a network, and an example of us, if we touch multiple firms, like, hey, have you ever heard a bit about this entity or this provider, things like that? I mean, individuals on firms know each other because they all, they live in that same world. And that's the beauty of the compliance network is, hey, have you guys seen this where or somewhere else? And this, so that's the little added tidbit we can give them as far as, it's always going to be a business decision, but we can say, hey, we saw something, heard something, or something like that. So that's on the business as well to make those types of decisions.
I would also like to add, in regards to interviewing them and asking them what situations have they dealt with in the past would be a good aspect. Like, have they dealt with data breaches before? How often do they update their systems? Do they have the latest technology available? From an IT perspective, like Shane has mentioned, there would be good, good questions to ask the team before, bringing them on board. Kind of like an interview process.
How do companies ensure, and obviously we just talked about vetting them before hiring them and bringing them in, but once they're on board and they're handling this, how should a firm ensure that those vendors are then complying with cybersecurity and data privacy regulations?
Well, like I said, most of these firms use, worldwide databases, be it MIS, the McDonald's system, or Smart Search, or not global relay, but I'm having what's the other one? World Check. So people have access because they all have contracts with these different vendors. So you can put that individual's name, that company's name into that database, and these services scrub on a daily basis for negative news. So if something did happen, unfortunately, that firm who's put them in that database would get an alert to say, XYZ had a negative news story come out. So there are ways to do it that way. And other ways are, show proof of your, like I said, IT, show us proof of your penetration test for this firm. And if someone who was regulated somewhere else, they might be audited as well. So, hey, where are your audited results, be it, yearly, monthly, quarterly, whatever it is, depending on whatever, world they're working in.
Is there anything specifically that firms should look for in the contracts with vendors to mitigate compliance risks?
Well, I think it kind of just goes back to what we just said, where, once you do the onboarding, it's truly, a business decision, but you've done your homework, be it, talk to compliance or you talk to your peers, in that same arena as far as your world of work. And the fact that you can have and use your tools, like the tools I talked about earlier, where you can use them to your benefit, where if you do have a possibility of negative news, you're getting that literally on a 24-hour cycle.
Okay, got it. What if a vendor suffers a data breach? What steps should a firm take in that situation?
Well, really, piecing that out is the vendor should notify the firm or the company they're working for to say, hey, we had a data breach. And then they would show proof of what happened and then tell the firm or the business they're working for to say, yes, your information was compromised or not compromised. So unfortunately, you don't really know that in real time. It's upon the vendor to relay that. But normally what happens is, or what should happen is, a firm would have a questionnaire for that vendor, either, yearly or however you want to do it, to say, have you have any breaches? And then they would respond. I mean, they are, they're part of your business. They're not full-time employees, but they're on your team. So if that's a questionnaire that firm has to say, have you had any data breaches in the past 12 months or so, it's on them in good standing to send that back to the firm, saying, yeah, we did have something. And then at that point, you can kind of dig into it more and figure out if it affected the firm in particular.
Aside from IT, because we touched upon that already, are there any other industries that typically face heightened scrutiny for vendor risk?
I think that goes across all types of business, to be honest with you, because especially now since COVID happened in 2020, which was obviously a unique situation. So people started having more third-party parties involved, meaning like vendor that does this part, vendor that does that part. But it's going to be an ever-changing landscape, because I think the whole you're an employee and you have to do this, and this. Firms have realized, and any type of business, it could be, I don't know, you're a franchisee and you own a McDonald's, you're a franchisee and own, a 7-Eleven. There's going to be different levels of people that you work with on a daily basis. And there's always going to be scrutiny, and you just need to know who you're in business with.
I think from the financial aspect, I think IT is solely important, or the most crucial part of the business, because you have voice recognition IT vendors, you have data storage vendors, cloud computing vendors, and they all fall in the IT realm of things, especially in the financial field. And it's very important that they stay up to date with the technology. Making sure that when new FINRA rules or SEC rules come into play, that they are up to date with that on their side, that would help circumvent any kind of issues from the firm perspective. But I think for financial, I think a lot of the vendors that we would look for would be, in regards to IT, and different aspects of IT, and some vendors specialize in different aspects of that different service they provide for the financial services sector.
How can companies assess the risk of fourth-party vendors? So you have a third-party vendor, and then they're then subcontracting work out to another vendor. What are some things that a company can do to address that issue?
Well, the first step would be, when you're onboarding that vendor, to have it, in your discussion or even in your agreement. Do you sublet your work? So that way, right from the start, you realize, okay, they don't do this all in-house, they outsource this portion. So I think that's the easiest and the smartest way from the start, because obviously as contracts continue, and if you don't ask the follow-up questions, or you don't ask the same questions that you did on onboarding, someone might have subletted something out and you weren't aware of it. So I think it's on the business, regardless if it's financial industry or any type of industry, that you have that continual conversation. Like, are we still using these individuals, or have we opted out and we're using, another layer down? So the firm needs to be asking those questions from the initial state, and then on an ongoing state as well.
Obviously, the more secure you store data and you store your work, the less likely it is to have problems. What are the regulatory obligations for storing financial records and compliance related work?
Well, obviously we're completely in a digital age now, I mean, you used to have individuals that would work from home and have a physical file with, client information there, and they'd have to put a locking key in there. But we're way past that. So at this point, if someone is using either VPN to sign into their own database, or if someone is working remotely outside of a VPN, if you're signing in with a specific username and password to their cloud. So every firm has a different way of doing it. It just depends on business by business as far as what they want to do to secure their information. But the reality of it is, as more people work remotely, they want to make sure that individuals aren't storing that on their laptop. The information they're getting could be client sensitive, and a lot of times it can be. They want to make sure it's being stored on either through the client, your VPN into the client's database, or you're in the cloud and you're storing it on their system that way.
How should firms ensure the integrity and security of records stored over time? Or should they be conducting periodic audits on the data to make sure there's been no changes?
Well, that's what happens. So in this world of financial services, you have to have an independent auditor come in once a year. And that is part of the list of questions, like who works from home, where's the data stored, do you have physical files at your house, or is everything done through the VPN or into their cloud or whatever database they have? So that is being captured, and it should be asked if someone's having an independent audit on a yearly basis.
What are some of the biggest mistakes that you see? I'm sure you've seen a lot of stuff in this space. What are some of the biggest mistakes you see firms make in document retention and storage?
The biggest mistake, I would say, and I saw this before at not multiple, but a handful of firms, where you're saving data on your firm drive. And then when someone comes, like I said, the independent auditor who's coming once a year, or FINRA who may come, every 3 years, or if there's a problem, even sooner, or the SEC, don't recreate the work. The questions they're going to ask, especially the annual auditor. Save the work ready to drag and drop for the annual audit questionnaire. Don't have to go back into your historical emails and recreate something. Save it as, I'm doing whatever the role is. I'm doing role 1 on every 30th of the month. Save that for that month, January 25, February 25, and it's there. Because if you get questions, and especially from regulators, and they say, oh, you have 2 weeks to give us, this data, and you have to go back and recreate that, in their eyes, they're not saying that they're going to say that, but it could be in the back of their mind and be like, they don't even have this readily available. Just save it the way the questions are going to come. And maybe if it's a new firm, you don't know how the questions come, but that's the part of, using, people who have been in the business. It's like, hey, here's how we should store this data, because it's easy drag and drop at that point.
Just to piggyback on that too, I also see that now firms are actually changing their passwords credentials. Before it used to be, I think it was 7 to 10 characters. Now I've seen it as far as 20 characters for saving, and how regularly you update your passwords to prevent any kind of credentials being stolen or any kind of data breaches and so forth. So any kind of attackers can't get the information that you have for that. So they should try to be more consistent in regards to requesting your password being updated, and the length of the password, not being able to use the same password in the same year or in the same couple of months. And also learn from Shane, they're being consistent in regards to, what regulators ask, and make sure you have it on file. So for the next day, you just update what needs to be updated, and you have it readily available for the auditors or FINRA when they come on site for review.
I want to bring it back to AI and blockchain. How do these new technologies, how are they impacting record storage and compliance related issues?
Well, I don't know, Shivan, you already talked about it. Do you want to?
Can you repeat the question? I'm sorry.
No, AI, blockchain, crypto. How are these new technologies impacting the storage of records?
I think that it's. Based on my experience with it, it's pretty much they're demanding a lot more space, a lot more storage for storage capacity to hold this information, because crypto is transferred so many times in a day that it's very hard to keep on top of the storage that's required for that kind of activity. But I do know from friends of mine who are trading crypto that they are required to put these long passwords in. It cannot be all numeric. It has to be a mix of different exclamation marks and the @ sign, and it's even when you have one password for transferring your crypto, one password for entering into the system to request the transfer, and another password for when you're actually going into the system to request the transfer to another institution. So I would say passwords are really important, and storage are some of the things that are impacting how firms deal with those that kind of activity.
Yeah, I know for me, I have, when it comes to crypto, I have a ledger for storage of part of my crypto that I have. And there's I think it's a 24-word passcode. So if you lose the device, you can only access the account through this 24-word pass key. So I keep the device in one place and the passcode in another place, because if you lose both things, you're out of luck. There's no recourse, there's no insurance on it. So
I've had a friend of mine who actually did not realize this, and he's a big crypto trader, and he updated his phone number. He went and he called T-Mobile to get the phone number changed, because he was getting a lot of these calls from random places, the same kind of AI attacks. And he changed the phone number, not realizing that he would have to go through and change with all the companies or all the financial firms he has cryptocurrencies with. And it took him 6 weeks to get it all done, because he had to provide his ID again. He had to, it was just horrendous. And he couldn't he couldn't trade, he couldn't liquidate, he couldn't transfer anything until he was able to successfully update the credentials and the phone number. And most of these firms do not have a customer service team.
Yep.
You have to send emails, and you have to be from the same email. It has, it's tough. It's challenging from a trader as well as someone in that field, in that finance field. It's challenging on both sides.
Yeah, it could definitely be stressful. All these systems are put in place, obviously, to protect, but it could be very difficult to navigate and deal with it in real time when you're trying to get things done. What are some of the consequences for non-compliance with record-keeping regulations?
Well, in this world, as far as the financial services world, if you're registered with FINRA or the SEC, obviously they can either put fines or penalties on the firm. And if it's specific to an individual, let's say if Shivan is using his personal email to conduct business, they can fine Shivan and the firm as well. So that's what happens when you're dealing with with FINRA. You're a member of FINRA, so they're going to ask questions, and you have to go by their rules and regulations. So meaning that they can come and ask you questions, and then to the point where they can say, we want to see all the emails that Shane and Shivan sent for the past 12 years, 12 months, or whatever it is, and you have to provide that data. So once they do their work and they dig into it, the firm itself can be fined. And even if it's so blatant and so bad, they could actually be, told to, you can't work in that industry anymore. And the same thing as an individual. If it's so bad and, just did not do anything, no checks and balances were observed. So that is a possibility for the individual as well.
Anything I missed? Anything else you'd like to touch on before we wrap this segment up?
I do want to add one thing in regards to cybersecurity. I'm also a CFE, certified fraud examiner, and I have to update my CE for this year. And it was amazing to log in, I think, over the weekend to see what is available for courses before my CE or my credentials expire. And most of the CE that was available or that's new out there was all on cybersecurity and vendor management. So I thought that was pretty interesting. For the last couple of years, it's pretty much been, reviewing activity and what is fraud and so much about fraud. This year, the new videos they have out there on the CFE is pretty much on vendor management and cybersecurity. So I just wanted to share that. it's new for everyone. It's just so many changes that every it's just crazy to see to keep.
But it makes sense. I mean,
changes.
it's there's no going back. Like I said, there's no physical files anymore. It's all going to be protecting your data, especially client data. In that case,
the genie is out of the bottle, literally.
Yeah, there's no coming back.
There's no coming back now. All right, guys. I think
one of the videos I saw on that was pretty much when vendors have to do updates in regards to FINRA rules and in regards to updates generally for the software that they're using. Sometimes they don't keep up to date in regards to if that update is going to affect current programs the firms and clients are currently using, which I know is something that is also very common. So they have to make sure that they're covering all bases, even though they're following the rules and making the updates to the software for the rules for the automated systems, that they're also making sure that other software is compatible with the changes that are being made. I also saw that on there, so I thought I would share that.
All right, sounds good. Well, we'll leave it at that. Thanks everyone so much for tuning in, and we will catch everyone on the next episode of the Compliance Network podcast. Everyone, take care. Have a great day.
Thank you.
Bye.
Thank you for tuning in to the Compliance Network podcast. We hope you found today's episode valuable. Until next time, you may find our community on social media at compliance.network. We are on LinkedIn, Instagram, and Facebook for more insights and observations.